Hey everyone, welcome back to Corporate Decoder, the place where we decode the wild world of corporate finances and find out if a company is actually as shiny as it looks on paper. Today, we're diving deep into Nevada Canyon Gold Corp's latest quarterly report, and let me tell you, this one has more twists than a gold mine shaft. So what is the big story here? This is a company that is all about digging up minerals and exploring for treasures. But before we get to the actual gold, we need to look at the money. And boy, does this report show us where the money is going. If you want to join the conversation about these types of filings and get early access to our analysis, make sure you join our Discord community linked right below in the description. Let's start with a snapshot of the company's financial health on the 30th of September 2025. They have about $6.1 million in cash. That sounds like a lot, but remember, they are paying out money for exploration. Their total assets are a little over $9 million. On the other side of the ledger, their liabilities, meaning what they owe, are about $1.5 million. This is pretty standard, nothing too alarming here yet. Now check this out, they have a lot of authorized shares, 100 million of them, but as of the 30th of September 2025, only about 28.3 million are actually out there being traded. That gives them a lot of room to issue more stock if they need to raise cash, which is a common strategy for companies in this industry. Okay, now for the results of operations section, which basically tells us how much money they made or lost. For the 3 months ending the 30th of September 2025, they reported a net loss of about $1.5 million. That is a pretty big chunk of change. And for the 9 months ending the 30th of September 2025, the loss jumps to almost $2.8 million. This tells us they are spending a lot more than they are currently making, which is typical for an exploration company, but it is important to see where that money is going. See this line item, investor awareness and marketing. In the 3 months ending the 30th of September 2025, they spent over $104,000 on this. And for the 9 months, it is close to $647,000. This is a significant amount of money dedicated to telling people about the company. But the biggest drain on their finances is exploration expenses. For the 3 months ending the 30th of September 2025, they spent a whopping $785,000 on this. And for the 9 months, it is over $1.1 million. This is where most of their money is going, as expected when you are looking for mineral deposits. So, putting it all together, the company posted a net loss of $1.5 million for the 3 months and nearly $2.8 million for the 9 months. This is not unusual for a company in this stage, but it underlines their dependence on funding. Let's look at the statement of stockholders' equity. This shows us the changes in the owner's stake in the company. Notice the accumulated deficit here. This is basically the total net losses the company has had since it started. As of the 30th of September 2025, this deficit is over $11.5 million. This number just keeps growing, which is a sign that the company is burning through cash to fund its operations and exploration. And here is something interesting. Shares to be issued on exercise of warrants. This shows the company has obligations to issue more shares when people who hold warrants decide to use them. This is common and means more shares could come into circulation later, potentially diluting existing shareholders' ownership. The total stockholders' equity as of the 30th of September 2025 is about $7.6 million. While this seems like a healthy number, remember that a large portion of this is tied up in the company's assets and what they owe, not necessarily liquid cash. Now, let's talk about cash flow, the lifeblood of any company. For the 9 months ended the 30th of September 2025, the company used about $1.2 million in operating activities. This is after accounting for all the non-cash expenses like depreciation and stock-based compensation. In their investing activities, they spent $60,000 on acquiring more mineral and royalty interests. This is consistent with their business model of expanding their resource base. On the financing side, they brought in about $288,000 from selling common stock. This is a way they raise money to fund their operations and explorations when they are not generating revenue from actual mining. Overall, for the 9 months of 2025, their cash balance decreased by over $916,000. This shows that even with cash coming in from financing, their operational spending is outpacing it, leading to a net reduction in their cash reserves. Digging into the notes, we learn the company Nevada Canyon Gold Corp is all about acquiring and exploring mineral properties and royalty interests. They are basically in the business of hunting for valuable resources. This section, going concern, is super important. It means that the company's management has to assess whether the company can stay in business for the next 12 months. They state they have enough cash to last that long, thanks to selling shares. But they also admit there are uncertainties and no guarantee they will hit their financial projections. This is a standard disclaimer. But it always makes you wonder if they might need more money sooner rather than later. they mention they are planning more financing, so keep an eye on that. This is where it gets interesting. This company, like many small resource firms, has a lot of transactions with related parties. This means deals with people who are part of the company's management or board. For instance, they owe money to a director and chief financial officer and a company controlled by that same director. In total, they owe $465,000 to these related parties. This is not necessarily bad, but it is essential to watch these transactions closely to ensure they are fair. And look at this $563,000 in related party transactions for the 3 months ending the 30th of September 2025. A big chunk of this is stock-based compensation for directors and officers. This means they are paying their top people not just in cash but also in company stock. This is common to align interests but also adds to the cost of running the company. This section details all the properties the company is interested in. They have several mineral properties and royalty interests spread across Nevada and Idaho. They mention properties like the Lazy Claims, Loman Agai Pa, and Belshazzar. They also hold royalty interests in projects like Oling House, Palmetto, Lapon Canyon, Pikes Peak, and Swales. It shows they are diversifying their exploration efforts. Here, they note anniversary payments for these properties. This means they are paying to keep their options on these mineral rights. For example, they paid $20,000 for the Agai Pa property and again for the Belshazzar property. These are ongoing costs to maintain their stake in future potential resources. And here is a specific business move. They sold their rights to the Swales property for $100,000 plus a royalty stake. They even recognized a gain of $20,000 from this sale. This shows they are actively managing their portfolio, sometimes by exiting certain projects to focus on others or to generate some cash. This is a big one. They entered into an agreement for the Lapon Canyon project where they can earn up to a 50% interest by spending $5 million over 3 years. This is a significant commitment and shows their long-term strategy to gain control over promising exploration areas. They incurred over $1.1 million in exploration. Expenses on this project alone in the first 9 months of 2025. Let's look at how they've been raising money. They have a common stock purchase agreement to sell up to $25 million of their stock. They already sold shares under this agreement, bringing in $288,000 during the 9 months of 2025. This is a crucial way companies like this fund their operations and exploration activities when they are not yet profitable. They also have a lot of warrants outstanding, over 6.6 million of them. These are essentially options to buy stock at a certain price. Many of these warrants are set to expire soon, which could mean a lot of new shares hitting the market if holders decide to exercise them before they expire. This section details how much they are paying in stock. For the 9 months ending the 30th of September 2025, they recognized over $1 million in stock-based compensation for directors, officers, and consultants. This is a significant expense, highlighting how much of their compensation package is tied to equity. They've also implemented an equity incentive plan which allows them to grant stock options to employees and directors. This is a way to incentivize performance and retain talent. They granted options to purchase 1.8 million shares, with a fair value estimated at over $1 million. This expense will be recognized over the vesting period. This part is the management's own explanation of what is going on. They use a lot of forward-looking statements, which is normal, but it means they are predicting the future, which can be tough in the mining industry. They talk about their plans, their capital needs, and potential risks. When management talks about results, they highlight increases in exploration expenses and director and officer compensation as key drivers for the period. They also mentioned the decrease in investor awareness and marketing costs, which is a big shift in spending. Management states they have enough cash to last for the next 12 months, primarily due to past share sales. They plan to raise more money through future equity or debt financings. This is the critical part for an exploration company not yet generating revenue. They are honest about the risks, stating that if they cannot secure additional funds, their ability to operate and grow will be severely limited and could even lead to them not being able to remain in business. Looking at the net cash used in operating activities, it went up significantly in 2025 compared to 2024. This means their core business operations are consuming more cash. Investing activities show they are making payments for property options, but they also received cash from selling a property interest. This is a mix of spending to acquire new assets and divesting from others. Financing shows they are still selling stock to bring in cash, which is their main way of staying afloat. They had $288,000 come in from stock sales in the first 9 months of 2025. This is a detailed breakdown of their assets. They are actively managing their mineral property interests, selling some like the Swales property and focusing exploration on others like Lapon Canyon. They are clearly making strategic decisions about where to allocate their limited resources. This is a major focus. They are investing heavily, committing to spend up to $5 million to earn a 50% stake in the Lapon Canyon project. This is a significant bet on the potential of this specific area. They are also continuing exploration on the Agai Pa property, with cost increasing compared to the previous year. This shows a consistent effort to explore different possibilities. So, what is my take on Nevada Canyon Gold Corp? Based on this, on the positive side, they are actively exploring and acquiring mineral properties, which is exactly what you want to see from a resource exploration company. They have a clear strategy to build their land and royalty portfolio. They are also transparent about their need for financing and the risks involved, which is a good sign of responsible management. The fact that they are strategically selling some interests while investing heavily in others, like Lapon Canyon, shows they are trying to optimize their investments. However, the numbers paint a picture of a company that is still in its very early stages and is burning through cash rapidly. The accumulated deficit is growing, and their reliance on issuing stock for funding is a double-edged sword. While it keeps them afloat, it can dilute existing shareholders significantly. The significant related party transactions, while not inherently bad, do warrant a close watch to ensure they are always in the best interest of the company and all its shareholders. The biggest risk here is their ability to secure continuous funding. Without it, their ambitious exploration plans and even their survival could be in jeopardy. They are betting big on the Lapon Canyon project, which is a calculated risk. If it pays off, they could see significant returns. If not, the financial strain will continue to mount. In conclusion, Nevada Canyon Gold Corp is a speculative play currently focused on exploration. They have assets and a plan, but the road to profitability is long and uncertain, heavily dependent on successful exploration and continued access to capital. Alright, that is our deep dive into Nevada Canyon Gold Corp's latest report. What do you think about their strategy and their financials? Let me know in the comments below if you found this analysis helpful. Please give this video a thumbs up and subscribe for more corporate breakdowns. And don't forget to join our Discord community for more behind scenes discussions. Thanks for watching, and I'll see you in the next video.